Good morning. This is Vince Lanci, and welcome to the Gold Fix. It's 8:04. Yesterday, uh, we shorted the gold market as it broke under 1271, looking for a much bigger move lower than was available. I think we were reaching for stars. I think the low was 1260. You're looking at silver right now. Sorry about that. The low was 1267 and a half. I'm going to leave silver up there. I'll just put the technicals up for now. Why don't we do that? And the market bounced. I had a nice gold chart up, but I don't have it available at this moment. Anyway, so every aspect of my trading system right now is giving me nothing to trade on, meaning it's not suggesting that momentum will continue higher. It's not suggesting that momentum will reverse, except for the weekly, which has given us a breakout a couple weeks, like 4 weeks ago. But there's no signs of that reversing. So, given the lack of information, the ability to trade that, that's to me the sign that unfortunately the market isn't as uh, active in terms of intraday movement than I'd like it to be. And by that I mean uh, we're in a trend. So if you look at the S&P, for example, uh, its sell-off where it just comes in and goes down, comes in and goes down. That may be volatility if you're looking at it on a weekly or monthly basis, depending on what it did over the week or month. But when you have a day that just moves in one direction, if you remember, any of you used Stottlemyre market profile from the old days, that's a trend day. There's no volatility when there's trend. That's just direction movement in one way. It has to go in both directions for there to be volatility. So we had a signal, a volatility signal, saying 4 weeks ago that the market would break in a direction and have a likelihood to trend. So right now, what we're seeing is actually, surprisingly, I should say, um, a stable move higher. Now, uh, if you notice, my stop was at 1275. Now, that number, 1275, uh, uh, is actually not based on any scientific information. That number yesterday, because I was not trading on, um, was not trading on a VBS signal, and I was trading on a technical chart. So I traded it technically, and so I sorted at 1271, and I had a stop at 1275. 1270 and a half I shorted at. That's right. 1270 and a half I shorted at. And I had a stop at 1275, and I had a buy level of 1260 though. The reason for that target being 1260 had absolutely nothing to do with my feeling the way the market would go. That was entirely based on risk reward, not based on technical analysis. So it was a hybrid concept where I did have a number, 1275, not on my system, but on one of those hourly trend lines. Um, you may remember that I had some hourly trend lines up. There we go. Now we're looking at spot gold. So I had about $3 or so. But let me get to the hourly. And what you'll notice is that, well, the hourly is loading right now. So what you'll notice is that, well, I don't have the trend lines on this chart. I took them off. I put them on the futures chart. What you notice as yesterday, uh, after this hour, okay, I decided to sell uh, in, and I got filled right around here. Okay, I decided to sell, but I hesitated, and I got filled right around here because of a technical formation, which I'll show you another chart in a second. And we got a little bit of an extension, and I was looking for 1260 or 1260, actually 1258. So 12, you know what? Let's just go to futures. Make that easier for you. Uh, Go to futures. I'm a little bit off my game today, guys. Apologies, but I want to compare the behavior yesterday to the S&P uh, uh, because you may or may not remember. I know there's a lot of lines to look at, but let's just get rid of the Bollinger Bands since they're actually not a tool today. Okay, Every line that is here now was here yesterday. This was a trend line that I drew. I just drew it just to draw it. This is a trend line that I drew in an approximation of one of Michael Moore's trend lines. And these thinner yellow lines are trend lines that I drew for tops. I like to draw those as exit levels. Now, the reason I sold yesterday if you look at the hourly chart, because that these are hourly trend lines, they may manifest on the daily. The reason I sold yesterday was we were above these lines that I had drawn, and with small ranges, hourly ranges. And then I saw long wicks up, and then it took the wicks out. So for me, that's a reversal. You would be bullish above here, but if it goes back through the wicks again, you would be flat. And then I saw these trend lines I had here, and in this area, and we're talking about futures now. We're talking about what I traded. So I did not sell any of this, right? Because a lot of it was um, um, on the 26th after the close, right? And then I mean on the 25th, after 24th, 25th. So we're looking at. So I'm trying to find the exact level that I sold, and it was in here. And what I did was I had basically picked up a cigarette off the ground that had basically been smoked with a little bit one puff left in it. And by that, I mean the sell off had almost exhausted itself. And I picked the moment through all these lines. I figured we had nothing. The blue line wasn't there yesterday. I drew that today. We were through all these lines. And on a technical basis, I said, I'm going to sell it because I think now we can go down to this area in here, 1260. At least I still have my target there, right? Okay, so look, if you watch the logic, market gets above, right? I have no volatility based systems, right? Market is now below all these lines. A couple of these lines, this line is not important, but I drew it. This line I thought was important because, well, I actually think Michael Mortars is talking about. And these lines I drew because I like drawing top to top lines on a breakout. And I especially like it when a market breaks above a trend line and then back through it. In this case, broke above wicks and went back through it. So in every instance, every line here was broken, and I decided to sell it. And that was, again, the cigarette that you pick up off the ground for one last puff, which is, I think, a metaphor that Warren Buffett uses. And we got down to 67 and a half. And that was all she wrote. And then the market went up. And, but, I took it home and the market went up and I got stopped out this morning very early. And actually in this bar here, in this bar, right? Depending on where you are, but I got stopped out in this bar. So here's the thing. Here's what I missed. We're below all these lines. I missed this line. And this line is another, and I'm not showing you his full report, is another line that Michael had drawn. Now, why am I focused so much on trend lines? I'm not a trend line trader, but let's face it, gold is not an easy market to trade actively short term. I can tell you where it's going on a week. I can tell you, I can reasonably predict and handicap weekly behavior. I can reasonably predict and handicap monthly behavior. But gold is not a very good market to trade short term actively. And those are the people that are subscribers and are in the chat room actually know this for the most part, the more experienced traders, and they'll have a macro opinion on gold and they may put a gold position on. We've got a couple guys in the chat room that have been bullish for some time, and Michael relayed, and they've actually been correct, and that's good. And Michael relayed a question they had for me since I don't have the chat room up right now. And the question I believe related to is uh, based on yesterday's trade, am I no longer bullish gold? And I got to tell you this, based on the time frame that I think that you guys are looking at, I think one of them might have been John. I'm not sure. No, I'm not. I'm not bearish gold. Let's start with this. I'm not bearish gold, uh, and I'll give you levels that I think are important uh, because this is again to answer a question while answering another question. The question I asked myself is, or the question that people may be asking new people is Vincent a technical analyst who uses trend lines? No, I'm a volatility trader who trades direction based on flow. So in that sense, I'm very similar to Larry. I'll look for correlations and I'll trade them. The correlation I use the most is volatility, but I use it to set up trades, not to enter and exit. I look for volatility to expand. The reason I have these trend lines here is because the analyst who gives me corroboration or confirmation of my own concepts, uh, he uses a lot of trend lines for intraday type stuff. He also has bigger macro formations, but let's look at his numbers and you'll see what I'm talking about. And then I'll give you the answer. Am I bullish or bearish on gold? Okay. But let's look at his now. Michael is pretty good on short term stuff, but he's also very good on predicting, not predicting, but in handicapping bigger moves. If we get above here, we will have a new uh, uh, bullish structure. If you remember, he said that a couple days ago. If we get above so and so, so I think this is important to look for. And after I got stopped out, this came in about 5:30 in the morning. This came in. Look for intraday strength to come in above 1274, 30 to 1277. And this number has been around before. 1274 to 1277 is kind of like um, it's a new um, uh, we'll call it a dead zone if we break above here. So my opinion is when I look at this here, and this is where I stop relying on Michael. I look at him for targets, and I look at him for me, this means to be short below 74.30, 74.70, which is what I did. But that was based on the trend lines that I drew that were trying to imitate his analysis. I don't have all his information. He doesn't share all of his tools, but he's very good at it. And this is where I have to pull back on using his stuff because on the downside, get short below 1267.50. Okay, that's great. But we're trading 75 now. So that's a $7 range right there, which is actually not a big deal. But if you get short below this number, it goes back above it, you're done for the day. You have no other levels. Gold will cross two important levels a day if you're lucky. Um, uh, so what I'm getting at here is that it's very hard to trade actively. So I may have been bearish yesterday uh, uh, because we were below those trend lines and remained bearish until I got stopped out. So as a person who is bullish gold and has been bullish gold since 1189 and then getting a different type of signal, another buy signal 4 weeks ago, I'd say that I'm still bullish, but and but is always the word I warn people about. Beware of the word but. Behold the underlying truth. Uh, I believe, assuming that I'm right, and we are going to go up, we're going to go up one of two ways. We're either close to a short-term uh, blow off, and then we're going to have possibly a steep retracement, or we're going to have that. We're going to have. I believe the next move higher will be a spike, and that spike will either be a blow off rally, or it'll be an extreme top for in the short term. Now that sounds easy to say. For people that are trying to trade, they're looking to handicap. Well, which is it, Vince? Well, anybody who tells you that they know where the market is going is lying. Anybody that tells you how to plan for events is helpful. So I'm trying to be helpful here. So what I'd like to do is look at Michael's numbers. If we get above 1282, we could. So it's kind of like this. If you want to trade the two things I said, it could spike and then crash, or it could spike, stabilize, and then have legs higher over the next 3 to 5 days. Not natural gas rally, but a decent rally. I would say if we get above 1274 and change, which you are now, uh, why are we not spiking? We're not spiking now. So I would say if you wanted to play today, if we get above 1274, 1270, let's just say 1277, you want to play today? You want to spec today, and you want to do it in gold, you buy it above on a print above 1277. You stop yourself at 1274, and then at 1282, if it moves quickly to that, expect rejection the first time off because they'll be selling in that area. And then if it gets back above it, you go up it. So let's say you were to buy two contracts. All right. Well, just because you cut your position in half that way. So if you were to buy two contracts on a print above 1277, okay, and we get to 1282.30, you have one contract there to sell. Period. You should do that. Right. So you take profits on half. Right. It's how you manage your profits. Right. So and then the market comes off between 777 and 82, 82 and a half. And now you have one contract you're long, and you have a decision to make. Do you want to buy it when it goes back down here? Well, if it goes back down here and screams through, you know that was the peak rally that I talked about, spike lower, right? If it, however, stabilizes between 77, 82 and a half, so rejects off 82 and a half, goes sideways and starts to breach it again, then you might be at the beginning of your spike rally that's going to take it higher for the next several hours, perhaps several days. Either way, if it goes above 82 and a half, I think you're going to get a blow off top in that area. Here you go. Sell against a combination of 1307.80 and 1308.30. It's 820 right now. That's possible exhaustion area. Get long on a solid penetration. So Michael's not handicapping the way I am, but he's kind of giving you the same areas. He's saying, look for strength above 74, 77. Okay. And then he's saying above 82.30 or 84 and back below, look for decent profit taking to come in. So he's saying in different words. I'll put this in English, right? Or a combination of Vinci's and Michael's. I'm bullish today, intraday, above 74 to 77 area. So I'm bullish above 77. This is what I would consider doing, although I'm not going to trade technically today. Um, I can't trade my system right now. There's no signals. I'm not going to trade technically because I can't tape watch right now. I'm still on holiday. So above 1277, and the market will be there when I come back. All right. I'm going to get long. I'm going to consider getting long. All right. And I'm going to take my profits in the 1282 area. If I were to buy two or 20 or 200, but let's call it two for this conversation. Uh, if I were to buy two, I would definitely sell 182 and a half or 82 and change, and I would have my stop out at 74. So my initial buys, and these are very tight, are a break above 77 with a stop out below 74.30 in the 74.30 area, which is very consistent with my buys last night of 75. I bought in the dead zone, right? Maybe that's the wrong place, but I bought above a level that's strong. We get above 82 and a half the first time, or the second time back up, I let that one lot run. So I buy two at 77. We go to 82 and a half. I sell one. If we drop back down, I make a decision about that one lot stop that I still have because I took half my position off. I either trail my stop up or I leave my stop there and I let the market take me out. Meaning if we get above 82 and a half, I don't care. I already sold one. We get above 84.10, I put my stop at 82 and a half, 82.30. That's the upside. The downside, which is what I was looking for, I thought yesterday, was the blow off top, so to speak. And that's why I saw all these lines here that I drew that I thought were important. The market didn't think they're important. The market thought this blue line was important. And I drew this. I connected these two lines because they were very short. These two pieces at the bottom here, they're close to each other. And then I extrapolate. I did not connect this piece. And it went through. And I like penetrations that are reversed. Penetration, reverse, penetration, reverse. And guess what? This line matters now. So I'm looking at this line. If you want to remain bullish on a multi-day area, looking at this hourly line, I would extrapolate this out and put it on a daily. All right, for those of you that are bullish out there, I like this line as a level to stop out if you're long, and you've held it for multiple days. See it now? Now it doesn't look so perfect when you look at it this way, but that's because I'm drawing it wick to wick, and I don't care about this is a long wick going through on an hourly basis. But on an hourly basis, look at it does. It touches the bottom of the three red days and it's penetrated by the three green days. I think that's interesting. And now we're above it. So if we stay above it on a 7 basis today, where it comes in at around 75.90 today, right? that's using it on a daily basis. I would I would seriously take a look at that trend line. I think it's important for intraday trading, and I want to pat myself on the back. Sadly, if you remember during the AIM roadmap, which is coming up for subscribers only at 8:30, uh, Larry and I were talking about the market, and it was strong, and he was looking for a level to sell it, and he's right. It's just timing is everything. And I said we have a non-confirmation on the bottom, the RSI, and I'm not going to put that chart up now. The RSI did not give us a new low when the S&P gave us a new low. And although I said it's early, you're not supposed to buy it yet. You're supposed to buy it if we close above 63, I think I said. And of course, the market had its biggest one-day rally of all. What did I do? I shorted gold. So this is frustrating. And on behalf of all gold traders in the world who want to trade it more actively, who have success trading it in a macro way, I would like to register a complaint with the gold gods, who may also be related to the plunge protection team, for constantly destroying the market intraday and giving us one level to trade, and having beautiful levels in the S&P and focusing on gold because it's shiny and yellow and because we're Luddites. So, but I do want to finish on the S&P today, uh, uh, because I may not be talking much about it on the show. Actually, I'm going to be on the roadmap today. I thought I wasn't going to make it, but I can make it now. The S&P's move lower today negates that signal to be long. If you're going to be long on something, you be long for a different reason. But that move yesterday was the market getting ahead of uh, that potential signal that I gave, and that's it.